Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, January 11th through Friday, January 15th, 2009. Well, folks, here we go. I'm starting with the 60-minute chart on the SPY. I want to dissect it, really go over it on a technical basis based on the fact of the beautiful channel that we have created over the last week of trading. This is actually the second channel in about 3 weeks that's lasted over a week. And very, very interesting to note that the volume has been very light, which enables these channels to really continue to evolve until they finally break down. Now, the key here again is how long is this channel going to hold up? How long are we going to stay in this line? Here it is right here, all the way to this point down here. Now, do you notice how they're both parallel lines to each other, and the market still kind of hovers between them? Now, what you really note here is that we closed on Friday of this week right at that line. Now, you have to look at that and say, okay, well, we know that's a little bit of resistance. What are the odds of us going above? What are the odds of us pulling down? Now, as you can see, every time we've hit this line so far, whether we pierced it here, touched it here, touched it here, touched it here, you've had a little bit of a pullback, but no dramatic pullback. So you have to look at it and say to yourself, okay, well, based on that, there's probably a decent likelihood that you do pull back, at least initially on Monday, possibly off of that line. And again, that's just looking at past history of this channel and how most channels play out. So again, you want to look at that for early next week and see, do we bust through it on the rare occasion that does happen, which usually is only about 20% of the time do you go through a channel that's angled like this. 80% of the time, 75% of the time, you see it come back in at least a little bit like it did here. See how it just pulled down a little bit, then hit here, and here just pulled back a little bit before boosting back up. So you could ultimately see a pullback and then a move back up into that line. It's just that line tends to be very powerful. Now, eventually, what we do know about these channels, and again, this is just from dissection of channel after channel after channel, is that that line will ultimately come down to this low area, which will be very good support, possibly an intraday buying opportunity or an overnight swing trade position available for that. And then at some point, you will take it out to the downside and move down to this 50 moving average and ultimately down to major support here at 113. However, again, the question still remains going into Monday's trading of this week. Where do we go from there? All right, so that's the big thing I wanted to point out here on the SPY going into next week. In addition, what I want to talk a little bit about is the intraday 10-minute chart. Now, here's that same line. This is the same channel. Remember, we're just zooming in on the 10-minute chart now instead of the 60-minute. But here, as you can see, and I can scan back all the way, you can go all the way back to the 4th where that channel starts, connect the highs right through, connect the highs, connect the high here to here, and so forth, and you get that same line right through the 7th and then to the 8th, which was Friday, and sure enough, there's that line. Again, it's where we hit just into the close. The interesting thing about the close on Friday was that it was really on a 30-minute buy program into the end of the day. Volume remained very, very light on all week really long, even on jobs report. We got the jobs report out on Friday, which was actually a little bit on the bearish side, showing a little bit more of a loss than analysts had expected. However, the market stayed flat to negative pretty much all day long, and then the buy program hit just into the close. It also happened to coincide with Obama coming out and speaking right around 3 o'clock, and then ultimately you had the buy program really take off into the close, led by financials and some of the other plays out there. But nonetheless, you ended right at the high range of that resistance point. And again, you can connect these highs going back and see that exactly on the charts. The question again has to be asked, what are the odds of us going higher? Obviously, you're going to have some resistance on the upside right at this level, not only because it's the upper range right there, but you also have the high of on Friday at 114.62. So that area right up here will be a little bit of resistance. Now, if we gap above it, you should go up to about 115. 115 will be your next intraday level of resistance. The even number play, those of you that are Research Center subscribers will know about that very clearly and how well it works as an even number play. But nonetheless, 115 after this level would be your next spot. On the way down, if you fall back down and start lower on Monday, what are you going to look for? You're going to look for 114.30. That will be a little bit of support. If you come through that, see this connector right here through this low? So you have Thursday through Friday's low right here. That will be your next support level. That currently trades at around 114.15, though it will slope up throughout Monday, then Tuesday, then Wednesday. It will get higher and higher depending on if we stay above that line. If you get below that level, you're looking at 114 even number, then the low from Friday at 113.65. All right, after that, you're talking about the 200 moving average, this trend line right here, which is at 113.50, and then ultimately down to about 113.40. In fact, all of these, what I would just consider this to be one good area of support right down here. All right, now that's the intraday chart, but I want to spend a lot of time talking about a few other things. We obviously know the market again closed basically positive for the week. Monday was the big up day. Tuesday, Wednesday, Thursday, Friday essentially were just flattish to slightly higher. I mean, it was really a weak market week all week long. And what I mean by that is the volume was very, very dead. We did about 100 million to 125. Granted, it's the first week of the year. A lot of people just coming back, a lot of people gauging the market. But you did get the sense that everyone was waiting on that jobs report, which came out at about minus 85,000. Unemployment rate was back to 10%. However, there were 600,000 people that did not even look for a job. Remember, when someone says, I'm not even going to look for a job in December, they're not included in the unemployment. If those 600,000 people that said that included themselves, the unemployment rate actually would have gone to about 10.5%, which is actually stunning, to be honest, that if that was included. Because you have to figure that those 600,000 people will probably go back to look for a job in January. Oftentimes, you'll see the last month of the year, people think companies don't hire because it's the holidays. People want to spend time with their families. They have shopping to do. So they say, you know what, I'm going to wait until the new year to look for a job. So does that mean now that 600,000 people are going to jump back into looking for a job? And does that mean that the unemployment rate, which we'll get in early February now, will be upwards of 10.5%? That's going to be really interesting to watch, folks. Pay attention to that very closely. Now, I want to spend some time on some other charts today. We talked a little bit about what to expect. Now, next week is going to be a big one. For those of you that are thinking about joining the Research Center, next week is the time to really jump on board here. And the reason why is because it's going to be a pretty crazy week. You have a lot of key earnings data coming out next week. I believe JP Morgan reports earnings. I believe you have earnings announcements from Alcoa on Monday. Monday close it starts with Alcoa, then JP Morgan later in the week. You have a lot of the financials the next 2 weeks, technology like Google and Intel reporting over the next couple of weeks. It's going to be busy, and that's going to create a flood of volume into the market. Every time someone surprises or disappoints, you're going to see a flood of volume one way or the other as people position themselves according to what they believe the market's going to do. The hedge funds, the money managers, the mutual funds, you name it, the money flow is going to start to move around here, in my opinion, going into next week. Now, what does that mean for the markets? Are we going to go up or down? Well, that's more for the premium subscribers to know what we believe, where we've positioned ourselves, what positions we currently have. But you have to expect volume to come back into this market. Now, I want to spend some time on some other charts. Let's first take a look at Goldman Sachs. Now, Goldman Sachs was one of the rare stocks that was lower decently on Friday. However, we had talked to you guys, and this is now two weekend videos ago. If you go back 2 weekend videos ago, you will see that we had called for a move in the financials based off of these bull flag patterns. And I've covered this pretty much every weekend video since then, last week too, because I wanted to point out the fact that it was correct. And you can see the upward move inside consolidation and look at the move up. And again, that's just reading pattern. Remember, we don't focus on stochastics. I hate that stuff. All right, there's a very rare occasion. Maybe once every 3 months, I'll look at stochastics on longer time periods like weeklies and monthlies, and that's about it. What I like to focus on is looking at the key charts. I really want to read the charts. No one does that anymore. I feel like it's a lost art, and that's really the art that's going to make you the most money. Learn price, pattern, and time. Right here, in spirit of bull flag, what happens? That tells you a bull flag obviously means bull, meaning going up. Look at that. Look at Wells Fargo. It's another beautiful one. And these are all ones we pointed out 2 weeks ago to you guys in this free weekend video. Look at that in spirit of bull flag. What happens? Bam. And all I did was just recognize a pattern there. Recognizing a pattern will give you the odds on that you're going to be right, and it's all about just being better than 50%. Now, I pride myself on being as accurate as 80 to 90% of my calls. That's why we do so well, obviously. But believe it or not, an amateur knowing pattern, price, and time should be better than 50%, just bottom line. All right, so again, there's no excuse in my mind. You can join the Research Center. Everything is included under the Research Center except the chat room. Really, chat room is separate by itself, and then the Research Center is a all-in-one inclusive of everything under the Research Center listed at inthemoneystocks.com. Now, a couple other things here, folks, that I want to get into. Number one, let's talk about ExxonMobil. ExxonMobil is an interesting daily chart for a couple reasons. You could make a case that you have a micro bear flag here. Watch this. Micro bull flag. Up inside bars, that's possibly a micro bull flag. However, having said that, the macro on ExxonMobil is actually a bear flag. Here's your bigger bear flag. So the question is, do you see a little pop-up and then a drop, or are we actually going to just start to roll over, and is the macro bear flag going to play out, even though you have a micro here? Here's your micro bull flag. In spirit of. These are both in spirit ofs. In spirit ofs mean it's a variation of the exact bear or bull flag. So watch those very, very closely, folks, on Exxon. Ultimately, this tells me Exxon in the longer term, meaning over the next week or two, is probably going to fall down. But in the near term, it's a mixed bag. Could mean that we're going to head up maybe on this chart for a little bit, just a little bit of a pop back into that 200 moving average. We'll have to see how that plays out. Let's talk about Apple Computer on the daily. What does Apple show us? Well, first of all, the first thing I note here is twofold. One, I see a micro headed head and shoulder pattern possibly developing here. And I'll just draw it in for you guys right here. It's very, very small, but you can actually see it. That's a possible in spirit of head and shoulder pattern. Having said that, while that's a bearish pattern, it doesn't play out until you break this low. Until you break this trend line right here, it's still just a figment of your imagination, meaning that's a possibility. It would have to break this lower line, then it's in play for a target of this 20 moving average and possibly the 50 moving average. Having said that, there's another side of the coin here I want to talk about. Let me erase these other lines. That next thing here is, believe it or not, an up move, and then you could make a case that this is consolidation. So you have a little bit of a bearish possible pattern, and then a bullish in spirit of bull flag. So the question again points to, well, which one do you believe? Well, the bottom line is, folks, all you have to do is this. Just go by this line. If it breaks this line to the downside, it's going down here. As long as it stays above, you start to look at slightly bullish move on Apple. All right, so it's a very easy trade because it's just above this line. If it breaks, it's going down. If it stays above, you angle it to the upside. Simply put, it's just about knowing the charts. And again, as I always say, folks, the charts, it's a book. When I look at this, it talks to me.